Hello, thank you so much for tuning in to Trading Day. I'm Amber Kanwar. One of our trending trades this hour. Check out shares of Canopy Growth. They're moving higher as the company narrowed losses in the quarter and hit a record fourth quarter revenue for its Storz and Bickel vaporizer brands. The CEO says they're cutting debt and ready to capitalize on better cannabis regulations in the U.S., but also some loosening of regulations abroad. To discuss, we've got David Klein. He's the Chief Executive Officer of Canopy Growth. Thanks so much for joining me.
Yeah, thanks for having me.
I mean, we'll talk about the quarter, but I feel like what a year, 2 years it has been, because a year or two we were talking about, is Canopy going to make it? Do they have the runway to make it? You know, sitting where you are right now, what has it been like this past couple of years?
Well, look, because it's a new industry and Canopy's a young company in a new industry, there's just a lot of changes that happen, you know, literally every single week that goes by. And, you know, from our perspective, we feel that, you know, we've just delivered a really strong quarter with growth in each of our businesses. We've cleaned up our balance sheet so that we have a very strong balance sheet at this point with over $200 million worth of cash in our bank accounts and no debt due until 2026. And we're seeing regulatory reform happening in the U.S. and abroad, and so I think it's been a lot of work, but I now feel like we have a really strong business to take on this cannabis opportunity.
So, I mean, 2026 is kind of close. It's in 2 years, and ahead of that, you have major, maybe expansion opportunities. So talk to me about that tension of like not wanting to be in trouble in 2026 and make your payments, but needing to invest now.
The best thing that we can do as a company is to grow our operating profit and our EBITDA. Because there is a level of debt that we can sustain, and maybe we're just about there. And so the best thing we can do is to just execute on our business and look for opportunities to grow our operating profits wherever we can.
Let's talk about profit. When is the company going to be in a sustainably profitable?
Yeah. So if you look at the components of our company, so we have our Storz and Bickel business, which you mentioned, had a strong fourth quarter. They were up 43%. Our international business was up 32% top line in the quarter. Our Canadian business was up 4% in the quarter. Each of those businesses as a standalone is profitable in and of themselves. And then we have kind of the public company costs that actually put a little bit of a burden on the business's overall profitability. But
so if it wasn't a public company, this would be profitable?
It would be pretty close, yeah.
So would you take it private? Should it be a private company?
That's you know, right now I think the opportunity is growth, and using the capital markets to help us grow, I think is super important. But then you have to look at our U.S. business, which it's called Canopy USA. It doesn't consolidate into our results. Each of those businesses is also profitable. And so if we were ever in a consolidation environment, the business would be operating profitably today.
But so do you plan to, even with the cost of being a publicly traded company, you know, get the business to a point where it can deal with those expenditures and be profitable?
Absolutely, and we'll get there this fiscal year. So we've just made a ton of progress. You can see in our numbers. So we will get there this fiscal year, and then yeah, we'll be in really good shape.
So it must have been frustrating on the conference call, and all these analysts are asking about margins in the Canadian business because so much is going right, but there was a concern about margin erosion, not year over year, but from the previous quarter in the Canadian business. What happened there? Yeah,
so we're an agricultural business at the end of the day, and an agricultural business producing in Canada. And so we grow our cannabis in a greenhouse that's supported with LED lights. And it's not as sunny in Canada in the winter months, and so we had lowering yields. We're correcting for that by adding more lights to our facility going forward, so we won't have that dip in the future. And we've already seen margins recover in Q1 back to the previous levels we've been at in Canada.
You mentioned something about the U.S. Canopy USA not consolidated into the broader business. Remind us what the triggers are for getting to that point, which is the ultimate goal.
Yeah, so we have a strong economic stake in that business. We don't control it, so we don't consolidate it. When plant-touching businesses in the U.S. are allowed to trade on the NASDAQ, we'll be able to consolidate, we'll be able to collapse that structure and consolidate it all together.
And that hinges on?
That hinges on probably safe harbor for the exchanges. Okay. I've somewhat given up on kind of federal legalization in the US. I think we're going to get pieces of progress, such as rescheduling of cannabis from Schedule 1 to Schedule 3. We'll get safe banking at some point. We need safe harbor for the exchanges, and for the most part, that makes it mostly legal. And then at some point, the federal government will decide to completely legalize it and put a federal excise tax regime in place and so forth. But we don't need that for our business to be functioning, profitable, and successful.
Sorry, that seems like a big statement that you've given up, at least in the near term, on federal legalization, because, you know, I think people move into these stocks when they hear descheduling, because they're like, okay, this is tick, tick, tick. We do all these things and we get there. So what's behind that?
Well,
that
because we at Canopy in particular, we don't need federal legalization in order for our business to work really well. We need rescheduling, which is going to happen. Mm-hmm. Safe banking would be very helpful, and we're hearing really good things coming about as it relates to that. And then the last thing that would be helpful, in particular for our structure, is safe harbor for the exchanges, so that a plant-touching business can trade on the exchange. When we're done with that, 90% of the benefit that Canopy could get from federal legalization will already be in the bank.
Okay, so then aside from Canopy, just from your industry view, because for others, I think your insights are sort of important, that it's looking like what? Is it just too gridlocked? Like what's the issue?
It will take time, and things like rescheduling creates momentum. But you know, we were talking about safe banking passing in 2022. Right, and so I think that we're taking a very realistic approach to how long this might take, and building our business in such a way that we can be very successful without it.
And when you're in Washington, what kind of feedback are you getting about that ultimate? You know, that's the golden ticket.
Well, you know, I hear the same thing in Washington that I heard in Ottawa as it related to excise tax reform. There is a lot of support, but getting that last mile to get it done has been challenging.
We've been spending a lot of time on the U.S., but you mentioned the international growth is very strong. What kind of opportunity is that for Canopy, and what percentage of the business can that become?
Yes, so right now, for example, our German business, we've been in Germany for many years now. We're the number 4 provider to Germany. Most of our flower comes out of Canada, so it's a good benefit for both of our businesses. You know, the German market right now is legal for medical use, and there was a lot of noise about legalization in Germany. It opened up the business for medical consumption in a way that it hadn't been open before. Actually, cannabis was previously declared a narcotic, and now it's not. So we're seeing just kind of year-over-year growth rates in Germany in the market of 20 to 30%. And we expect that that'll continue for the foreseeable future, at least the next 12 months.
David, thank